Hello, welcome to ICRC-TV COVID-19 HR and business updates. We've got another great show for you today. Thank you for joining us. My name is Pandy Pridemore. I'm founder and principal consultant with the Human Resource USA. I got the band back. I got the core crew back on the show today to talk about both HR and some business updates, starting with Carl Ulrich from Sibley, Shillitoe and Dyer, an attorney here serving the Columbus and Dayton area. Carl and I have been working together for years, and with the next gentleman, Britt Skiers from Emory Federal Credit Union and host of Sharonville Chambers Business Talk. Hi, guys.
Hi, Pandy.
Isn't it amazing how much enthusiasm they show when they realize that we get to be together again? Yeah, well, anyways, I still love them and I'm glad they're here. We're going to continue our conversations about what this COVID-19 has done to our economy and our business. After all, if you're watching the show, it's affected you in one way, shape, or form. And now that everybody's trying to open up their doors, and granted, there's a lot of companies who aren't opening their doors. They're actually going to wait a couple more months and wait for things to kind of settle out even further. But in the meantime, other decisions for business are going to occur. And one of those is how we use all this talent and ability that's now been laid off or found themselves available in the unemployment line. Back in 2010, if you were anywhere close to a business decision or a part of a management team, you realized how many people actually put their shingle out and started working as independent contractors. And today's language, we use the word gig worker. Well, Carl and I are going to talk about how do we consider a gig worker or an independent contractor, and how do we legally work them into our business plan? Because this is not just tapping somebody on the shoulder and saying, hey, can you come and help me out for a while? This actually has a lot of legal ramifications. And Carl and I have talked about this on the show at Business Talk a number of times. He's very, very comfortable with it. And I thought we really needed to prep all of you watching to really think hard before you start bringing in independent contractors, especially once your PPP money's gone and you realize that maybe you don't have the business to continue bringing back actual employees for small projects or very specific work. So as I tell you, this might be the time when you get your pencil and paper out and take some notes, because we're going to get really down and dirty in this subject. Then Britt's going to join us on the second half of the show and kind of update us on where we are within the banking aspects. And we had Don Malott from Malott & Malott on last week, and he did a phenomenal job helping us understand all the changes within the PPP. But what about us as individuals, and what happens to our banking needs and all the decisions that we're making from our personal perspective? Because if you're a business owner, you also have a personal life. So Britt's going to walk us through some of the traps and some of the problems that we need to be aware of on that subject. So to begin with, Carl, welcome back. It's been a couple of weeks since we've seen you.
Thanks, Pandy. It's great to be back. Thanks for having me once again. Appreciate being here.
Oh, no, I love it when we're all together. So when we're talking about independent contractors, we're basically going to be wrapping ourselves around not only the Department of Labor regulations, but also the IRS, because the IRS is a major driver in all this, aren't they?
They really are. The trouble and the challenge for a lot of businesses with this independent contractor process and classification is that there are a variety of different tests to determine whether someone is an independent contractor or an employee. Those tests don't always agree with one another. And so we have to be aware that, depending upon the context, there may be a different answer. And so depending on which test you happen to be applying. But we talk a lot about, we emphasize the commonalities among those tests. All the various legal tests for independent contractor status versus employment status have some things in common. Mm-hmm. And those commonalities include control. So if you have direct control and direction over someone, on an ongoing basis, that person is more likely an employee. If you are contracting with somebody, if you're engaging somebody to provide you with a project to completion, and they're responsible to you for the end result only, but not necessarily being controlled by you on a day-to-day, task-by-task basis, that person is more like an independent contractor. So a lot of it has to do with the level and degree of control and direction that the principal has over the individual. The other way to look at it is an employee is not an independent business. They work for the employer and are part of the employer's business. But an independent contractor looks, feels like an independent business, which is really engaged in a contract relationship with the principal, and two separate businesses, two separate bundles of risks and rewards, two separate issues of control and direction. So it's very much arm's length as opposed to an employment relationship. And so those are the two, I guess, easy ways of thinking about the difference between employment and independent contractor status.
I'm glad you mentioned the contract agreement, because I actually printed out one. And if our viewers can look at that, that's a legal document. This is not pulled off the internet. This is not something that your office manager throws together or your controller says, oh, no problem, I'll put in here what we want. This is a legal contract. And again, because we're dealing with the Department of Labor and IRS, messing this up or not getting this correct could cost you tens of thousands of dollars. And we'll go into where those monies would come from. But in fact, the one that I've got, Carl, and I'm not sure about yours, but I actually saw one today with a client this morning that was 5 pages long. This one in front of me is 8 pages long. And this, again, is just the agreement by which the two parties plan to work together. And there's very specific things that need to be in this contract. Do you want to go ahead and start listing some of those for them?
Sure. So we talked about an independent contractor relationship being really two separate businesses engaging in an arm's length contract agreement with each other. And that agreement then is the written document that you just showed us. Very different from an employment relationship, right? Yeah. So that written document sort of orders and defines the relationship between the parties, two businesses. And one of the things you want to make sure that you say in an agreement like that is you want to have a provision in there that says, hey, this is an independent contractor, not an employment relationship. It's not a partnership, not a joint venture. It is two separate businesses. And that provision probably is right up front. The other thing you want to talk about, and the IRS is very, very cognizant of this, is that you want somewhere in your agreement to talk about the tax treatment for payments made by the one party to the other. An independent contractor comes in and does a service or provides a series or set of goods or something like that in exchange for payment. How is that payment treated from a tax standpoint? We all know that in an employment relationship, when you get paid a wage or a salary, you have certain payroll tax obligations as an employer, and conversely, you have some tax obligations certainly as an employee, Social Security being one of them. The state and local income and federal income tax withholding, all of that occurs in the course of an employment relationship. But in an independent contractor relationship, two separate businesses, one providing something in exchange for a fee, there isn't that kind of withholding setup. And you say that in your agreement. You talk about this not being an employment relationship and that there will not be withholding and that each party is responsible for their own tax obligations. Social Security will not be paid, that kind of thing. So the tax treatment needs to be set out pretty specifically in the agreement. There are a number of other things I think you typically want to see in an independent contractor agreement. One of the things we would like to see when we draft agreements in our offices, we'd like to see some language in there about indemnification, which is a simple, fancy word for saying that if the other side does something wrong that results in our side getting sued, the other side, if they're responsible, will hold us harmless from anything that we get required to pay. and vice versa. So those indemnification provisions are required. Insurance is another issue that has to be addressed. If you're bringing somebody on to do a work on your house, and you know they're a contractor, they're going to have insurance that will cover them for injuries or for damage to the property. And you want to make sure that if you're engaged in an independent contractor relationship as a business, you have similar types of provisions covering insurance. Obviously, workers' compensation is another area that you want to address. Workers' compensation is a hallmark of an employment relationship. So if you have employees, you have to cover them with workers' compensation insurance. Either you're self-insured or you have a state fund that you pay premiums into. In Ohio, that's the case. And so that's a hallmark of an employment relationship. If you are engaging an independent contractor, that independent contractor is not your employee, would not typically be covered by workers' compensation insurance that you pay for. They would have their own workers' compensation insurance for their own employees, separate and apart, separate, different businesses. And the same goes with unemployment compensation. Those kinds of things are handled independently of each other in an independent contractor relationship. The two entities handle that for their own employees separately from each other. So again, those are some of the things I think to be thinking about. Obviously, payment and when you get paid for the services you provide. What happens if payment is late? Are there late fees? So there are a number of things you want to incorporate in there, just administering the administering the services when the services need to be performed and when they need to be paid for. And then the final thing I would add would be, in many cases, if you're engaging an independent contractor, you want that contractor to be making to you certain representations and warranties. If I'm engaging an independent contractor to work on my house, I want them to stand by the work that they're performing. If they're going to be good at what they do, they'll be happy to stand by it. And you want to build that into an independent contractor agreement by saying things like, we'll represent and warrant that the work that I'm going to be performing will be consistent with standards, quality standards in the industry, or will be good workmanship, or words to that effect. There are a number of different ways to say that. So those are some of the basic elements, I think, of a standard independent contractor agreement.
And you know what, I want to caveat off of that one, Carl, because years ago I had a pharmaceutical company who took on independent contractors to do some of their research projects, but over time, the individual would actually be placed in front of the client and would speak on behalf of the company. And I was very, very insistent, to say the least, that that individual needed to have some kind of insurance protection, because if they misspoke on behalf of the client, my gosh, it could have been devastating results, and the client would have been caught with it, which would have meant that it would have gone back on their general liability insurance. And yet my clients are notorious for wanting to pull that section out, because most independent contractors, gig workers, as we need to start calling them as well, aren't even thinking about carrying a general liability insurance or a professional liability insurance, because again, if they're not sure that they're actually going to be a legitimate business, they're just looking for work and they're just trying to pick up some extra cash until they figure out what's going on. They're not going to have that or be able to offer that protection to a client company wanting them to come on as a contractor. And a company really needs to think hard about that before they engage with someone to speak on their behalf.
I agree. Insurance is not something everybody wants to think about because it can be expensive and time consuming to figure out. I think every business, whether it's large, well-established business with lots of employees, or a small mom and pop shop with just a few employees or none at all, needs to be thinking in terms of risk and
Yes.
How do we protect against risk, and what are the various kinds of risks that a business can have. And one of them, of course, is making a mistake. We all make mistakes, and sometimes, unfortunately, those mistakes that can be made really do come back to haunt us financially and professionally. And so business insurance of errors and omissions, you mentioned, is a good word, the short form for it. But general liability type insurance is really one of those key things. Having a good insurance agent, somebody you trust and can provide you with some guidance in and out of all the complicated different insurance products out there, is a real valuable resource. Just like any business would want to have an attorney, would have a consultant, would have a banker. You want to have a good insurance agent you trust who can really help you through all those issues.
I love it. So let's go back to what you were talking about in regards to identifying the invoicing, the pricing, the timing. I'm not, I guess you and I really haven't really talked about it, but I like for my clients to use a statement of work. And as you can see, this is so simple. This is really, really basic information, but it's separate from all the legalities. So you've established your legal relationship with the contractor. You've established that that's a contractor. And now you want to establish what kind of work you want to do with them. And maybe we ought to back up even further, Carl. One of the first things that I try to work with clients on when they even talk about contractors is I back them up and say, wait, how long do you think you're going to need this individual? And what kind of impact is this individual going to have on your business? And here's the reason behind this, and please chime in, but if you're thinking about bringing somebody in who's you have no end date on, you're looking at this person saying, look, I need them to run this division, or I need them to create this process and teach all of us how to do it, and then just continue on. My gosh, that's not a contractor. That's an employee. So a statement of work is probably for the individual who's you're just kind of filling in work on it. Am I saying that correctly, Carl? Can you better improve on that?
No, I mean, I think I hear what you're saying, and I think you hit on a point though, which is an important one, and I probably didn't mention it when I was going through my litany of things to include in an agreement. But obviously, one of the things you do want to say is what you're engaging that person to do, what the contractor is required to do, and there should be some description of the project. Most independent contractor relationships are engagements for a specific purpose, a project purpose. At some point, it's going to be done, as in contrast with an employment relationship, which is, in the ideal case, sort of an open-ended, ongoing relationship over time. But an independent contractor comes in to do something, to build that, to design that product or design that widget, at which point they're done, contract is done, they move on to their next customer. So the contract should say something like that in there. And it really does come down to control. So if you get so detailed in the agreement that you're requiring the individual to report to 8 o'clock in the morning and contractor has to leave at 5 and they're subject to daily or weekly evaluation, whatever, you get the idea. The more control you exercise over the day-to-day affairs of that individual, the less they become contractors and the more they become employees. So there's that wonderful balance that you have to have so that you can define the terms of the relationship well enough, but also not overdo it so that it converts the contracting relationship into an employment one.
Well, and this statement of work has worked well for the clients that I've referred, because they might have 3 or 4 different projects. And here's what the statement of work will do for them is they can say, this project, I have this budget and this timeline. But when I need you to come over and do this project, I have a whole different budget and a whole different timeline. And the same contractor might be working on both projects, but they're going to be paid differently from a pricing standpoint, and the timelines are entirely different. So this kind of a format helps you establish that rather than just giving a blanket of saying, look, I need you to work for me, and no end date, no expectations, no, you're just locked into a price. Well, how do you know you're going to make a profit or there's going to be any margin on that project if you just kind of leave it open-ended? So yeah, I think companies need to really think hard. I'm not saying that gig workers are a negative thing towards the company, but they need to really think hard. You and I have said this a million times, Carl, if it looks like a duck, quacks like a duck, walks like a duck, it's a duck. And the IRS wants their cut, folks. They are not going to want to know that you didn't pay the employment taxes. They aren't going to want to know that you didn't cover them under workers' comp, because workers' comp may go ahead and just bill you for 1099s if they find out that you have them on staff. That has happened a number of times. Now let's go over all the definite don'ts, which you touched on here a little bit, and I still catch companies doing this. Independent contractors are not employees, point blank, end of story, which means we do not ask for employment identification. There's no I-9 involved with an independent contractor. We don't give them the employee handbook, and we do not have them completing a timesheet or going into your payroll processing and your payroll software and completing their time in that process. Carl and I both experienced a situation where they were putting them into the payroll system, and the word employee kept showing up on the software, and it was not a good situation. Can you elaborate on that, Carl?
Yeah, so records do matter. What documentation you create does matter, even if it's a default in a computer system somewhere. If you aren't diligent about making the distinction between employee and contractor somehow in the records over time, you are creating bad evidence for yourself. I mean, if you're trying to establish a contractor relationship, keep it out of the employment realm, but you've got internal documentation, which all suggests, as you put it, Andy, that this person is being treated like an employee or is classified internally like an employee, that's going to be a disconnect. And what's going to happen in that situation is that whatever regulator gets involved in reviewing that documentation is going to, again, question credibility. You're taking one position, you're obviously taking one position with the regulators, but your internal documentation suggests something else. It may have been inadvertent, but you're creating a burden on yourself of proof in order to overcome that problem of record keeping. So records and documents do matter. The other thing I'll say, I think, to a point you mentioned earlier, Pandy, just to backstep just a little bit, it's important to remember that the distinction between employee and contractor status isn't just about taxes. It's about a lot of other things besides. It's about wage and hour compliance. It's about workers' compensation compliance. It's about health benefits and other employee benefits compliance. It's about unemployment compensation. It's about all these things. Each one of these potentially has a different regulator. Now, the interesting thing that happens in many of these cases is you have a cascading effect. If one regulator comes in and begins an audit of your classifications, finds an error or a problem in those classifications, then let's say it's the IRS, it then potentially becomes a problem also for the Department of Labor in a wage and hour context, and also potentially a problem for the state of Ohio for workers' compensation and unemployment compensation premium compliance. So it becomes a cascading problem. It is rarely about just one regulator or the other. It's usually about all kinds of different things, and so compliance is extremely important, and it becomes far more difficult to defend once it gets out of the bag. So internal documentation, consistency, having a check on making sure that you have your updated agreements with all the appropriate language in them, probably reviewed by legal counsel if they haven't been, is a good idea. How you classify workers from a wage and hour standpoint, from a tax standpoint, from a state benefits standpoint, all those things are probably worth taking a look at on a fairly regular basis.
Well, and let's touch back on two more other things. From a legal document, you are permitted and should to collect a W-9, not a W-4, but a W-9. So that is something that is required for you to process a 1099. You also need to remember that the state of Ohio requires that you report independent contractors And I think that the threshold is like at $2,500, but I just tell my clients, go ahead and just report anyone that you're going to bring in as an independent contractor, because you don't want to have to be thinking all the time if I paid him $2,500 or $2,000 or $1,500 or whatever it is. And that's, I mean, that is a requirement if you're going to work with any independent contractor, not a full-fledged business, but an independent gig worker. We didn't touch on it, but I think we need to kind of emphasize, Carl, the importance of a confidentiality clause, which can be in the independent contractor agreement, but many clients want a separate extra sheet.
Yeah, I think that's a good point. Remember, when you have a business and contracting with somebody to come in and work in your business for a period, or with your business for a period of time, anywhere from a plumber coming into doing work, or some kind of a manufacturer consultant, or anybody coming in doing consulting for administration or for some other purpose, they're coming in and they're going to have access to your company records because they have to have access to them for the most part. The problem with that, though, is that you want to be sure that once they leave, once they're done with the project, they don't take that documentation or that information with them, or worse, even worse, they don't turn it over to your competitors, or they don't use it for their own purposes. So you want to protect the intellectual property that you might have to make available to them so that they can do their job to complete the contract. So confidentiality is important. We do suggest you can have that in your independent contractor agreement. You can also have it as an independent agreement. It doesn't really matter how you do that, as long as if you do them in multiple agreements, you want to make sure that they agree with each other, that there are no provisions in the two agreements that are contradictory, which can sometimes happen if you're drafting them independently. So to make sure that all those agreements fit together in the right way, but confidentiality is important. Yeah, and that goes with other things too. I would say if somebody's coming in to design a system or design a product or providing some research and development assistance on a contracting basis, which can sometimes happen, they're creating new ideas. They're creating new technologies, perhaps creating new intellectual property. Okay, who's going to own that? Who, once the relationship is done, once the product is developed, once that system is perfected and the contractor goes on their separate way, who owns it? Is it the property of the customer company, or is it the property of the independent contractor who helped develop it, or is it jointly owned? So if you've got that kind of an arrangement, contracting arrangement, you want to make sure that there is some ownership, understanding as to who's going to own the end result, who's going to be the owner of the work product, and that can sometimes get a little hairy unless it's set out in the agreement up front. So that's another thing to think about.
So to kind of wrap things back up, if you're going to think about using an independent contractor, please go straight to the needs of your business first. And we've talked about this. Just be absolutely sure that you know exactly what you're going to ask this individual to do, and that you're going to get your money's worth when they come in, because we all have to watch every penny we're spending right now. But then again, to preserve and protect everything that you've got with your business, make sure that it's a legal agreement, not a piece of paper, toilet paper, paper towel, and a crayon. And everybody's heard me say that. Legal agreement. And if you want to mine, you're going to use a statement of work, but you're going to collect that W-9. You're going to report them to the state of Ohio, and you are not going to give them anything that says employee. I know this sounds like a lot of work for small projects, but trust me, Carl and I have collected the bumps and bruises of working with companies that have not done it right. And these aren't our rules. We're just trying to help each of you out. So if you have any questions, let us know, please. I'm looking at my notes. I think we did it. I think we covered it. I think we got the entire topic. So now we can kind of caveat on over and start talking about all the fun stuff like interest rates and and making mortgage payments and credit ratings and all the stuff that Britt is an expert on.
What's happening?
Well, you haven't gone gray either, so I'm pretty pleased that you're doing as well as you are.
I'll tell you what, my gray was showing more as you know, my hair helmet got bigger. I was the first day they opened, I was at the hair cutting place, and I wore my little mask and everything and got in there, and I didn't even have to wait all that long. It said it was an hour wait, and I waited until 30 minutes before my appointment. I went in there and they had two or three people ahead of me, and I got right in. So I am happily back to my 2 and a 4 and scissor cut my bangs.
But what about your nails, Britt? Come on, give me.
My nails, I didn't get them done, but man,
what's going on in the banking world?
Huh?
What's going on in the banking world?
Well, we're hanging in there. We're trying to help people as best we can. I think, by and large, we're going to see things start to get better. I see things improving. We had, gosh, how many people take unemployment over the past 2.5 months? Where are we up to what, 37 million or 38 million? Is that what the number is? We're going to see a lot of bad stuff show up in all of the news and the numbers, from this week until probably another, 30 days or so. And it's going to sound like everything's awful.
Mm-hmm.
Because all of those measurements are from when we were shut down. There's a lag between all the numbers.
Okay, good.
So, it's going to continue to sound terrible, but the good news is most places are starting to open up in June. Some are pushing it off until mid-June or even into July. But as soon as all of these businesses start to come back online, you're going to see a lot of those unemployment claims drop. A lot of those jobs are going to come back. You're going to have some that don't, because I just read an article a minute ago where because of the way they did some of the things in the CARES Act, some folks are going to make more money staying home and not going back to work through July than what they would make on their job. So we'll see. I'm hoping that people will not take advantage of that sort of thing and take advantage of the help. And I know we're going to get into some of the mortgage forbearances, that sort of thing too. I think by and large, a lot of folks, have been able to keep their incomes, and most people have been able to, weather this couple of months, pretty well. And I think as we start to see things open back up here in June, you're going to see things get markedly better. You're going to see a lot of numbers kind of skyrocket upward. The unfortunate thing is that we're not going to see, everything go back to 3.5% unemployment. We're not going to see everything go back immediately, because some of these jobs did go away permanently.
Mm-hmm.
The good news is that we came into this pandemic and this shutdown very strong. Our economy was very strong. Things were going very well. I just talked about the real estate industry, for example. Real estate industry was, has, been doing great the last couple of years. It really recovered nicely. And luckily we were very strong going into this. And what's amazing to me is, as I look at the numbers, they stayed pretty strong even through the lockdown. I mean, quite honestly, we still had closings and everything going on through the lockdown, and we had some people pull their houses off the market, but they're putting them right back on here in the next month or so. We still have a tremendous shortage in inventory, so home values are going to stay, pretty elevated actually. So we're going to come out of this pretty well, I think, all in all. Yeah, we're going to see some really nasty numbers here. Whenever they're going to be talking about, the unemployment figures, and when they talk about some of the economic numbers, they're going to be based on when we were closed down. So I want everybody to have hope. This is not going to, as things continue to open up in June and July, you're going to see numbers really rapidly increase.
And that's a relief for a couple of reasons. And when you and I were talking on the phone, you know, I've got clients who have used their homes to back loans for their business. And when I started hearing about the forbearance, I started getting really nervous,
Yeah.
because if they're not making those mortgage payments, it's not just their home that they could lose, but they could also, I mean, despite all the PPP money and all this other stuff, they could really be backing themselves from a business and professional perspective into a corner. And, you know, Don Malott was on with us last week and was just so insightful in sharing, you know, all the tax monies that have been postponed, payments that have been postponed, that all are going to be coming due. And, you know, my gosh, you start adding those numbers up, even for a company, you know, of my size, if I weren't making those payments, I can't even, I'm just sitting here going through how would anybody make that decision? But there are some people who are making those decisions. And it's scary from a banking perspective. How are you coaching people through that?
Well, here's the thing. Let's talk about that forbearance thing for a second. If your loan happens to be owned by Fannie Mae or Freddie Mac, they've already come out and told folks that, hey, you're not going to, there's a couple of ways that forbearance can work, and most people don't understand forbearance. And this is something that I cautioned, I think, in one of the first shows that we did. There's about 3 different ways a bank or a lender could do forbearance. The first way is they say, hey, we're going to give you 3 months off your payments. Okay. But here's how that works. You have no payments for 3 months. And in the 4th month, you owe the 4th month plus all those other 3 months all at once.
Gosh.
That's not helpful for most people.
No.
Yeah. So Fannie Mae and Freddie Mac came out and kind of said, hey, that's not going to be how that's not how that's going to work with Fannie and Freddie loans. Okay. So that's a relief that we have some concrete, assurance from them on that. Here's the thing. Not every mortgage, though, is owned by Fannie Mae or Freddie Mac. So if your loan is with a particular lender who didn't sell your loan to Fannie Mae or Freddie Mac, their forbearance may work like we just talked about. So that's number one. You got to make sure if you enter into a forbearance, number one, don't enter into forbearance if you don't absolutely positively need it.
Let's start with that.
Let's start with that, because
Yes.
Here's the thing. I know some folks that heard that and said, woohoo, I don't have to make payments on my mortgage for 3 months. That wasn't something to be excited about, or something you to take advantage of just to take advantage of. Okay. First off, you should only do this if you're absolutely in dire straits. Your income went away, you cannot make your payments, that sort of thing. If you currently have your income, if your income didn't get interrupted, you should not be taking forbearance. Okay. First off, not only because it could potentially harm you with some other things that we will talk about down the road if you want to take advantage of lower rates that might be coming down the pike. But also, it also strains the system. I mean, don't be part of making it harder to recover from this. Let's make this recovery make it as quick as possible. Let's not put ourselves in a deeper hole that, it makes it harder to get out of,
Yeah.
So first off, understand that's one way the forbearance could work. Another way forbearance could work is they could say, okay, we're going to take the 3 months that you didn't pay, we're going to divide that by 12, those 3 payments, and we're going to add that to your payments for 12 months, and you'll make a higher payment over the next 12-month period to catch up those 3 months that you deferred. Okay, so that's better than the first one I just said, but that would still be a hardship for a lot of people.
That could be a hardship. Yeah, absolutely.
I mean, folks really cannot afford, $300, $400, $500 more a month over the next 12 months. The third way they might do forbearance is the most, I think, palatable way, is they truly give you 3 months off, and then in the 4th month, you just start making your payments again, and they take that. They take the 3-month payments and they just kind of tack it onto the end of the loan, if you will.
Yeah.
That makes sense. That's the most, I think, friendly way for that to be, administered. And that's how we did it at Emory Federal Credit Union. Okay. So we gave on all of our members who have loans with us, we gave them the opportunity, if they call in and request a forbearance, then they would have the opportunity to take 3 months off, and we would just simply add it to the end of the loan, and then they would resume making their payments in that 4th month. But you got to make sure you get that in writing, that you understand fully what kind of forbearance you're entering into with your lender. Okay.
Now, Britt, is this strictly for residential, or can this be applied to commercial property as well if there's a mortgage on it?
Well, yeah, of course, the commercial properties are not owned necessarily by, by Fannie or Freddie. Some of them may be SBA loans, and I think, through the depending on who the commercial lender is, most commercial lenders have also given that type of forbearance also for commercial loans. So, everybody wants to keep people in their properties. We don't get, as lenders, we don't get any benefit by trying to foreclose or having to foreclose on somebody. So we're going to do everything in our power to try to keep you in your property, whether it be your home or your commercial building. The other thing is renters. A lot of landlords also have the opportunity to get forbearance, and some renters are actually looking up whether or not their property has a mortgage on it that's owned by Fannie and Freddie, and they're saying, well, I'm not going to make my payments because my landlord has an FHA or has a Fannie Mae or Freddie Mac loan, and so they can get a deferment, so I shouldn't make my payments.
Oh my gosh, what is this going to do to people's credit rating?
Yeah. So now Fannie and Freddie have said that it's not to, if you have a Fannie Mae or Freddie Mac owned loan, it's not supposed to affect your credit. Okay.
Oh, okay.
It's not going to be reported as a late payment is what's going to happen here. And same thing with, like with us at the credit union, we're not going to report you as late.
Okay.
Now, some lenders, what they may do is they may put a comment on the credit bureau forbearance, even though they don't show you late. They might put in the comments. There's nothing that bars them from doing that. The other issue that could happen, that could come up is, let's say down the road, I don't know, in the next 6 months, I mean, I'm reading articles, industry articles, great minds from the industry are saying that we may see interest rates. We've already seen interest rates drop below 3%. Okay. We may see interest rates possibly below 2%. Okay.
Why not? Everything else is out of this world. Why?
Yeah.
But who's going to have the credit to obtain that?
Well, here's the thing. If you paid your payments as usual and you've not missed any payments and so forth, you're going to be able to take it. Obviously you're going to need to be able to qualify for that. Now, some lenders, what they may do is they may say, hey, okay, we want to see your last 12 months of pay history on your mortgage. And if you took 3 months off, that could affect your ability to qualify for those rates. Now, Fannie Mae and Freddie Mac are continuing. The FHFA, they're kind of behind the curve on this, but they are finally starting to come out and give some clarity and perhaps, say, okay, yeah, we will still allow someone to refinance back to another Fannie Mae or Freddie Mac loan, even if they took forbearance. So, here, there's a lot of stuff that's still kind of fluid here. One of the things they've started floating is if you get a loan right now, Fannie Mae and Freddie Mac have started to consider maybe adding a prepayment penalty on your loan, that if you pay it off within 12 months or 6 months, that you have to pay a prepayment penalty, because of the fact that they see that people might refinance now, and then of course rates drop again another 0.5% or more, or 4%, and then people refinance that loan again.
Oh my gosh.
So all of this had a lot of unintended consequences for the mortgage industry. We were strong going into this, and then all of a sudden they passed this CARES Act and they say, okay, everybody can take 6 months off or 90 days off or 6 months or possibly even 12 months off their mortgage. So now you have all these mortgage servicers. Okay, here's the way it works with a mortgage servicer. If that loan is owned by Fannie Mae or Freddie Mac, okay, the servicer is collecting the payments on behalf of Fannie Mae or Freddie Mac. And so when they collect the payments, they have to make payments to the bondholders, because Fannie Mae and Freddie Mac, they package up those loans into mortgage-backed securities and sell them as investments on Wall Street, right? Sell them to pension funds and all kinds of other investors out there. Well, those bondholders have to be paid regardless of whether the homeowner makes their payment or not. Hmm. So the mortgage company, think about this. If you're a small, medium-sized mortgage servicer and mortgage company, and all of a sudden now Fannie and Freddie have said, oh, you don't have to pay payments for 6 months or 90 days or whatever the case is. Well, they didn't relieve the mortgage servicer from having to pay the bond payments. and make the taxes and insurance payments. So now you immediately just put all of those mortgage servicers at risk because they don't necessarily have the money to do that if they're not collecting the payments.
Oh my goodness sakes.
So they're starting to do some things to kind of fix that, but yeah, there were a lot of unintended consequences to every time they try to help with one thing. I think you guys were talking a little bit about that earlier. You try to help with one thing and then it creates all of these other unintended consequences.
Right,
so,
right.
And a financial institution, I mean, obviously this affects our ability right now to, our income is affected if you're not making payments, right?
Right.
And the other thing that's happening is this has created lower mortgage rates, right? So guess what everybody's trying to do right now? Refinance.
Absolutely.
So think of all of the mortgage servicers right now that, they're also, not only are they having trouble with all of that fun stuff, but they're also getting paid off left and right. So their mortgage portfolio is also shrinking.
Is there any good news? Do you have any? I liked that lower than 2% interest rate.
Yeah.
But can you give us something like definite, like in this world? In this world where, as we've said a million times, perception is 99% reality, and right now none of us know what to perceive. I mean, I guess that's why we just keep asking as many questions, and I appreciate you coming back on the show so that you could really help let us know, what has changed, what hasn't changed, and what we should be putting our concentration on. Very quickly, Carl, I was reading back over the proposal for the HEROES Act, and I literally got sick to my stomach with all the changes that are in that proposal. And I will say that again, it is a proposed bill. It is strictly words on paper right now.
It passed the House, but it's dead on arrival in the Senate.
Yeah, are we talking about the HEROES Act, the latest cash infusion, I guess? Yeah, it's interesting. We're gonna it's unlikely to pass in its current form. Let's put it that way.
That's a good way to put it.
That's a really good way, but from an HR perspective, I'm looking at all those extensions, and I mean, some of that is extended through December of 2021, and you and I both know that there's a really good chance that a big chunk of that will be approved, and the confusion that we have now will just be even more complicated through the next 6 months. And I think that's the issue with many of our viewers, is that they're realizing that, okay, we got through March, April, May, 3 months, but we really haven't even really gotten our feet wet into getting out of this yet. And we still have questions, and we still have challenges coming, and there's just so much unknown. I mean, Carl, you and I really haven't talked for a couple of weeks, and you've just been so overwhelmed. Is there anything that you want to share with the viewers that you've encountered here in the last couple of weeks working with your clients that you feel is important that maybe you mentioned that I haven't thought of?
Wow, where to even begin? I think there are a number of things that I'm seeing from my practice. I'm seeing businesses slowly get back to work. But I think to Britt's point, what I'm also seeing, I work with a lot of manufacturers, and not exclusively, but many manufacturers. And what I'm seeing is, as they're bringing people back to work, they're also eliminating positions permanently. And so they're using this as an opportunity to right-size their businesses. Things have been going so well for so long. I think now that there's a little bit of enforced belt tightening anyway, companies are kind of reevaluating what their workforce should look like, and are taking this opportunity to right-size their workforce. And that is, I've seen that across industries, but particularly in the manufacturing realm. The other thing I think we're seeing is a lot of confusion about the PPP repayment and forgiveness rules. And that's not strictly employment related, but it does have some employment aspects to it, certainly, because part of that, at least 75% of those loan obligations are related to payroll. So there's a lot of confusion, a lot of grappling with what those PPP forgiveness rules mean and how to manage that money in the best possible way for the business. So we're seeing an awful lot of that. We're also seeing a lot of concern, a lot of angst about keeping the workplace safe for those folks who are returning to work. It's really remarkable in many ways. Not remarkable, but it's reassuring in many ways that employers are paying such close attention to this. And you know, you think sometimes in terms of a real adversarial relationship between employers and employees. That just isn't the case, at least in my experience here in the short term. Employers really are trying to do the right thing, and they're trying to make sure that the workplace is safe and accommodating for those people, particularly those folks who may be in a higher risk category. So there's a lot of concern about making sure that obviously they comply with the requirements of the CDC and of OSHA and so on, but that they're doing it in the right way for their employees. And so that I think those are some of the things that I'm beginning to see or have been seeing for a few weeks. It'll be interesting to know what happens with the HEROES Act, because much of the law has been about extending and enhancing some of the benefits that started out in earlier legislation that had passed. And I think you know, one of the things that I've heard some concern about is you know, the FMLA, family medical leave. What's that going to look like if the HEROES Act in some form passes the Senate and gets signed by the president? What's the FMLA going to look like after that happens? Obviously, the provision we have seen so far is probably not going to be what it looks like in final form if it gets passed at all, but we're watching that very closely. So stay tuned on that as well.
Yeah, I don't know that we've seen the full impact yet of the CARES Act. I mean, right now, all the PPP money is just now, in the last month or so, really started to hit the streets. People getting their checks. Either they had them direct deposited or they just had them mailed, and you know, a lot of people, you know, that hasn't even truly been factored in yet. But the good news that you want, the good news, Pandy, the good news is as we open back up, things are going to get nothing but better from here. And to Carl's point, I also will echo that I've seen most employers really take this seriously and really do a lot to reconfigure office spaces and everything to make sure that people are going to be safe. They're going to take people's temperatures. I mean, the best thing that we can do right now as a country and as a community is, you know, to get things open. Let's get things open. The people that are at risk should still shelter. Those that are not as much at risk, you know, let's get out and let's start shopping local. Let's go spend some of this money. Let's go out to eat and tip big. Let's you know, if you're in the market to buy something, I think our patriotic duty right now is to help get things going. And the faster we do that, the faster everything recovers, and the faster we get back to some semblance of what we would consider normal, right? Hopefully science continues to do its thing, you know, and they make sure that we, you know, come up with a vaccine and some other things. But yeah, I think by and large, you know, the best thing we can do for everybody right now is to find ways to safely bring people back into the workplace, get businesses open. And like I said, I'm doing my part. Every time we get a chance to go out to eat, I'm trying to go out and I try to tip as big as I can. Whatever things I need, I'm going out and buying them. Let's get this thing moving. You know, let's get back on track. We're Americans, and you know, we can overcome this.
Well, we've talked about this a number of times. As you're running your business, as you're making decisions on behalf of your employees, always make them based on facts. Do not allow fear to pull you away. Again, perception is 99% reality. Make sure your reality is based on the facts and get as much information and support as you possibly can. We are so blessed to have the opportunity to provide you with as much information and facts as we possibly can going through this COVID-19. We want to thank ICRC-TV for giving us this hour every week. It has been a real blessing to us, and a number of our viewers have just been extremely complimentary and appreciative. But you know how I have to end the show. Remember, communication is absolutely important. So make sure you're communicating with your employers and or with your employees. Work together as a team. And business owners, don't do this alone. You know my mantra. Get yourself surrounded by a banker, a CPA, a good attorney, a consultant, your employee benefits broker, your 401k broker. And Carl stressed today, you know, let's get partnered back up with our insurance agents, because again, they're the ones who can get us through this stuff. We can't, as business owners, know everything. And as you can see by watching the show, I surround myself with the best people I possibly can. They make me much better at who I am. And I'm Candy Pridemore, founder and principal consultant at the Human Resource USA. And I want to thank you for being here. We'll see you next week.